Want to talk about also what's happening in this market from a technical point of view. The S&P 500 punched above its key moving averages last week. So want to find out what the next test could be. I want to go to stockmarketmentor.com founder Dan Fitzpatrick. And Dan, you know, I'm looking at the S&P 500 and I'm seeing what we will call a reverse head and shoulders. Very bullish, always a very bullish formation, but there's always a neckline of sorts. I'm not sure where that is, but where do you see us really on the S&P breaking out to the point where you've got to be in there?
Yeah, I'll tell you, this is a market that you don't want to ignore. I understand that there's been a lot of pain over 2022, you know, and that's part of the reason for that, I think, is that most investors are buy only. And so they kind of get used to a bear market, but then at the same time, they don't want to miss the bottom.
Right.
And where we are right now is we've had the bottom in the S&P in October. The level that I'm looking for is 4,100 on the S&P. Right now we're at 4,000. If we break through 4,100, that really is going to confirm this reversal. Right now, all these moving averages, the 50-day, the 150-day, the 200, are really clustered together pretty tight. And that is really a solid foundation where any pullback is going to hit those moving averages and it's going to be really muted. And then at the same time, any move higher is going to flush out some of these folks that have been, you know, snake bitten in 2022 and push them back into the market.
Let's talk about a couple of areas you like, though, because we got your number 4,100. I like that. I'm really intrigued by the fact that you like the rails, the Dow Jones U.S. Rail Index. And by the way, it's a great looking chart to me. Again, I mean, I see a couple of handle formation. Again, we see some resistance through here, and it feels like it's off to the races. What's driving this right now?
Well, what I think, first of all, the transports, the Dow 20 has been outperforming the rest of the market. But what I'm seeing is that the market is anticipating a drop in rates. It's anticipating a pickup in business. I know that semiconductors are starting to push. And what I think is happening is two things. First of all, this is where institutions are going. They're certainly not selling this, but the good news is the rails have not gone up far enough to where you're looking at them and saying, you know, it's too late for me to buy.
Right.
I need to wait for a pullback. But I think what's really driving it is this sense that economic activity is going to increase, and that implicates rails.
I got to squeeze one in. You got to work with me. We only got 30 seconds, but this is really home builders, right? Everyone's hearing about the housing market is imploding. We got the Dow Jones U.S. Home Construction Index. I mean, it broke out late last year when all the bad news was coming out, and it's only built up momentum. Can this keep going?
You know, I think it can. Bottom line is this, on these home builders, I don't really care about catching the exact bottom. I just care about the middle part of the move. And this is the way I think about it, Charles. The Fed is ultimately going to start pulling back. That's going to implicate home builders. The Fed's more like that irritating guy in the Prius who gets in the fast lane in front of you and decides, you know what, you don't need to go any faster than 70.
You know what? Prius drivers irritate me no matter what lane they're in. Dan, we appreciate you, my friend. Great stuff. We'll bring you back real soon. All right, coming up, President Biden dismissing Republicans' quote,